addressing misinformation, because a lot of misinformation have been pervading the public domain, the public space about the tax laws. So we want to address them. We'll look at some major myths and what the facts are. Then we'll look at where we were before the tax reform, and if that is where we should continue. Then we'll look at what has changed by the tax reform, the changes introduced by the tax reform. So that's where majorly we'll be dealing with the key issues of the tax reforms. Then we'll end with recommendations and compliance steps. Then we will look at if there are any questions. Right, so we'll go quickly to the first section, overview of the tax system. Overview of the tax system. So first of all, it was Benjamin Franklin that said that there are two certainties in life, and those two certainties are debt and taxes. And Nigeria, like any sovereign nation of the world, has the rights, the government of Nigeria, like any sovereign nation, has the right to levy taxes on a citizen to carry out the government activities. So taxes have always been there, even from the olden days, from the Bible times, taxes have been there. And then the major issue we have, for instance, in Nigeria, when I look at the social media space and see the comments of people, it's always as if the tax reform is an introduction of tax in Nigeria. It's as if this is the first time they have been talking about tax in Nigeria. So a lot of people don't have the correct idea that this is a reform, not an introduction of tax in Nigeria. So what is tax? I can give a comprehensive summary definition of tax as a compulsory contribution. So it's compulsory. It's not something that I decide to pay tax, I don't decide to pay tax. It's always compulsory. Tax, if it is not compulsory, then it falls short of the definition of what a tax is. It's compulsory and is levied by a sovereign power. Levied by the sovereign power, that is the government, on incomes, on profits, on goods, services, or properties of individuals, corporate persons, such as companies, trusts, and settlements. Now, those taxes, when collected, are used for carrying out government functions, such as maintenance of law and order, provision of infrastructure, health and education of the citizens, or as a fiscal tool for controlling the economy. So our taxes are used for, to carry out governmental functions. Now, the tax system always involves at least three main aspects: the tax policy, the tax laws, and the tax administration. Tax policy, tax laws, and tax administration. Okay, so the tax policy actually represents the underlying objectives for taxation. The taxes are not just levied in a vacuum. The taxes are not just levied, oh, other governments of the day of their countries are levying taxes, so let us levy tax. And then there's no strategic objective, there's no vision, there's no purpose, there's no economic objective. Then that falls short of what is correct. So there's always a tax policy. And for this tax reform, there have been, of course, there has been the tax policy, as we're going to see shortly. So the tax policy answers the why and the what's behind the tax reforms. Why the tax reforms? So it reflects the economic, social, and political goals the government seeks to achieve. Now, for this tax reform, these are the policy objectives for the reforms. And the law, the tax law, are now enacted and drafted so that the policy objectives will be achieved. Number one is fiscal equity. They want it such that there will be equity, fiscal equity in the system. So they are addressing the fiscal drag. That is why if the taxes, if someone whose income possibly increases, and then his tax increases accordingly. But there's no real increase. It does not reflect in real terms. So there's a fiscal drag there. It's the person income is increasing, but the economy, the inflation is not reflecting in the person's lifestyle. So they address that fiscal drag and said, oh, minimum wage earners, low income earners, and the poor and vulnerable of the society, please, you're exempted. So it's to ensure progressivity. So the tax band for income earners, for personal income earners, for individuals, is now progressive. Then they address the issue of fiscal federalism, the share of fiscal responsibilities and rights to generate revenue between the tiers of government so that it will be more equitable. And then defending the taxpayers' rights and to ensure a level playing field. So that is fiscal equity. Some persons, they do business. Let's say two people are doing business, the same type of business, person A and person B. Now, person A pays tax, say, oh, I'm a law-abiding citizen, I pay my tax. Person B say, no, I'm not going to pay any tax. So he evades tax. At the end of the day, those two people are not operating on the same level playing field. So that's why evasion is also tackled as part of the policy objectives. And then the number two is stimulation of economic growth. Yes, people will say the government of the day they are just driving revenue. All they want is to generate revenue, to drive revenue. First of all, generating revenue and driving revenue is not a bad thing for the government. It's not a bad thing even for us as individuals, as citizens of that country. Because once the government if they have more money, they'll be able to carry out more responsibilities and more duties for us. So that the core objective was to stimulate economic growth. Stimulation of economic growth will translate into more revenue for the government. So also competitiveness to make sure that Nigeria does not operate a tax system that discourages foreign direct investments or even business people carrying on business in this country and say, no, let me go to another place where they have a better tax system that is better. So they want the environment to be conducive, the economy to be conducive in comparison with other economies. And then there's tax harmonization. This is very, 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 very important, tax harmonization. Now, imagine an individual who stays in, say, River State, for instance. Someone who stays in River State and is registered as a taxpayer in River State. Before now, the tax authority will issue the River State TIN, tax identity number. And now that person possibly is from Anambra State. And he does business in River State. He pays his taxes in River State, but he wants to acquire the property in Anambra State and he wants to build there. He goes over there. They say, no, for certain approvals, they say, come and pay we are not seeing you that you don't have a TIN, you don't have a tax clearance certificate. So no, but I do business in River State. I pay my taxes there. So that one is over there. Over here, you have to do something so that we can approve and all that. So that creates a kind of disharmony. So since that person is a taxpayer in Nigeria, whether in any state, there's supposed to be harmonization, a single window to reflect that. So that is a core issue there. And so we see modernization also. The world is evolving digital-wise, and there's no need to be using crude and outdated methods of administering taxes. So modernization have to be one of the policy objectives, and then sustainable revenue. Have to close the tax gap. The tax gap is what the government ought to get from the country as taxes and what it actually gets. Tax gap is wide or has been wide to rationalize incentives so that there will be the playing field will be level, not just granting incentives anyhow, curbing tax evasion, moderate tax avoidance, and BEPS means base erosion and profit shifting is a method of tax evasion as well. So the revenue of the government is also part of the policy objectives, yes. So that It's not just that, oh, the government wants to raise revenue, just to gain revenue and all that and all that. So first of all, for the government to raise revenue is not a bad thing, but there are other policy objectives. And then you notice that the generation of sustainable revenue is even the last one, even though it is also very, very important. We are going to see more of that shortly. And then the second part of the tax system is the tax law. So for this tax reform, 4 comprehensive tax acts have been passed. They were passed in June 26th of 2025. And a number of them even commenced that day, 26th of June. The Nigeria Tax Act is the first one. That one commenced yesterday, 1st of January 2026. So the Nigeria Tax Act, this law consolidated and simplifies all the existing tax laws on individuals and businesses into one modern framework. There were a number of laws that this tax act consolidated, repealed, amended, and brought all of them together. So, okay, let us have a particular reference law for our taxes in this country. Not that we have this one, we have that one, and then it causes confusion for the taxpayer, because you may not even know which of the laws is defaulting at any point in time, because they're actually numerous. So this simplified it and brought them together. So we just have a single tax act that we make reference to. And then we have the Administration Act. This talks about how the taxes are administered, enforced, and the taxes are collected. And it also talks about the powers of the tax authorities to ensure compliance. And then we also have the Nigerian Revenue Service Establishment Act. So this act fundamentally repealed or replaced the Federal Inland Revenue Service with the Nigeria Revenue Service. So the Federal Inland Revenue Service had a national, their responsibilities cut across the nation, not just for the federal government. So that duty and responsibility ought to be reflected in their name. That's why their name was now named Nigeria Revenue Service. And then we see the Joint Revenue Board Establishment Act. This established the Joint Revenue Board. Before we had the Joint Tax Board, and now we have the Joint Revenue Board. So to coordinate tax administration between the federal, states, and local governments, and eliminate multiple taxation, and of course enhance harmonization. Then the tax administration is the final part, and this tax administration talks about how the taxes are administered. The tax administration brings to life and emits the tax laws. Tax laws will not work on their own, so the tax administration brings them to life. So they are administered by the federal, state, and local governments, and the federal, state, and local governments have revenue authorities at those levels to administer the taxes on their behalf. And then for the federal government, we have the Nigeria Revenue Service. They obtain their power from Section 3 of the Nigerian Revenue Service Establishment Act. And then we have the State Internal Revenue Service, obtain their powers from Section 87 of the Nigerian Tax Administration Act 2025. And then Local Government Revenue Committee, obtain their powers from Section 93 of the Nigeria Tax Administration Act. So let's look at Section 2, addressing misinformation about the tax law. So look at this picture. You see the metaphor of the blind man and an elephant. How when each of them, due to where they touch, the part of the elephant they touch, they have their own interpretation that they run with. So they show us the danger of a single story, the danger of a one-sided story. So you need to have the full picture before running with the story, not just to have an aspect and then you say, oh, this is the entire story. So a lot of persons have been commenting about the tax laws, especially in a negative light, due to the aspects of the elephants that they touch. It may be, oh, the government of the day have not been very accountable. The government of the day have not been, they have not been using our taxes that they have been collecting before and other revenues for the common good. and all that and all that. And so that has been the only side of the elephants that they touched and interpreted, and that's what they used to interpret the entire tax law. So, but that is dangerous. Let us see the whole picture so that we're able to comment objectively. So there are some contentious issues and misinformation that we are going to address quickly. So first of all, we need to know that, yes, people say we are entitled to our opinions. That is with a clause. You are entitled to your informed opinion, not just your opinion. You may not have uh, proper information about that particular subject matter. Hence, you're not entitled to your opinion on that matter. You are only entitled to your informed opinion. And that has been what has pervaded the public domain. A lot of persons have been commenting without proper information. Yesterday, I was happy to see on Twitter or X where someone commented and said, I refrained myself from commenting once I realized that I didn't fully understand. I had not fully understood the tax laws at that time. So the person refrained herself from commenting until she got good understanding, at least a good working knowledge of the tax law and what it intends to achieve before commenting. For instance, some persons have been saying, oh, let us go and protest. On social day, we are going to gather ourselves and protest that these tax laws, they want to kill us. They are killing us with a lot of taxes. So we have been, myself and a number of my professional colleagues have been trying as much as possible in the little ways we could. That's part of the reason this webinar was hosted to address these issues. So some persons will come up and then they make categorical statements. So they want to kill us with tax. That next thing now they'll start taxing us with 20%. They'll start that when money comes to your accounts, they will start taxing it. So no, you're not even citing a relevant portion of the tax law that have been passed. You're just saying it authoritatively. And the major problem is that those people have a large following online, and then their followers run with that and say, oh, and then they say, let us go and protest. Oh, Nigerians are docile. They will just adjust this and that. So persons will say, oh, let us increase our prices of goods and services we render or we sell because of the tax law. And then they are doing that is changing the economy because they're actually going against the objective of the tax laws, and they're doing that because they are not properly informed. Even a lot of uh, political figures in the country, possibly on the side of the opposition, have also been commenting, and then their comments reflect that, oh, they don't have proper understanding. And so that is why you are entitled to your informed opinion. Entitled to your informed opinion. The first myth we see is that they say the government is introducing new taxes on the masses. Government want to kill us with tax. Every day, tax, 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 tax. Want to kill us with tax. The fact is that the government is actually reducing taxes on the masses. I'm going to show you that shortly. The government is actually reducing taxes. It's not that they are increasing. The government is reducing by this tax law. So there's no need to fear and there is no need to panic. And then they say, oh, your bank account will be debited from January 2026. Thank God we are in January 2026. I don't know if anyone's account have been debited arbitrarily, and they said, oh, that one is tax. The government just came in and said, you're going to be taxed, and then they debit you. No. The way taxes are done, taxes are not levied. You see the definition of tax. They are levied on income and other things. They are not levied on the money just the money in your account. That is not, you don't levy tax on money in someone's account. You levy tax on the income, on the profits, on the gain, not just the money in someone's account. And the tax system is that you will, for business people, you will self-assess. It's a self-assessment system, and then you declare this is my profits. And of course, you say the right thing because this tax reform has system to curb evasion. So that when whatever you say can be supported by the data that the tax authority have already with them. So, but you have the responsibility to declare if you're not an employee, because if you're an employee of an organization, they carry out the payee system where they deduct your taxes even before they pay your salary. So you don't have a problem for employees. But for business people that run their businesses themselves, you have to self-assess. For companies, they have to self-assess and then file and do their tax returns. And that is where the taxes will be applied, not just money on your account. It's false. So, and then there's small businesses will suffer. This is one of the worst lie about the tax reform. Some people are even twisting the picture. Yeah, they say the taxes will even be indirect. That is not so. Small businesses have a lot of reliefs compared to the previous tax regime. States, they say states will be losing revenue. That's not true. States who are treated uh, more fairly. So the tax reform is just revenue grabbing. We saw that in the tax policy, that the tax reform is more about stimulating development. And they say capital gains tax of 30% to be charged on capital market investments. Okay, why this is true, that the tax, because the Capital Gains Tax Act was actually repealed by the Nigeria Tax Act. So the capital gains tax is about tax on capital gains. That is on when you want to dispose or sell off your shares or your personal property, be it, or company property, be it land or other chattels, movable properties, and then the gain on them, the gain after deducting your costs of acquisition and other incidental cost of disposal of sales, the gain is taxed. Before the old tax regime, the capital gains tax uh, rate was 10%, but now it is 30%, but that is with a clause. Well, I will explain that better. So you will see that at the end of the day, many people are not even going to pay capital gains tax at all. Their tax rate is zero. So the fact is that capital gains tax exemption applies to all investors, 99% unconditionally. We'll see that very soon. And then minimum wage earners, they say minimum wage earners will pay tax. But the truth is minimum wage earners are exempted from pay from tax. They pay tax, pay as you earn. They have been saying some persons who think that they are wiser than everybody because they would just want to comment. They said the 70,000 is the minimum wage, right? So 70,000 times 12 is 840,000. That makes the annual income. And then they said the first 800,000, because the tax law said the first 800,000 is exempted. Then I said, so 40,000 is tax. So why are they not saying minimum wage earners will not pay tax? When in reality, according to them, that 40,000 will be taxed. But that is false. The law categorically states, if you see section 58 and section 163, subsection 1T, minimum wage earners are fully exempted. So it doesn't matter the amounts they earn as their salary. If tomorrow the minimum wage is increased to 200,000, the law exempts minimum wage earners. And this is a good news. Someone earning 70,000 before have been paying taxes in the old tax regime. The new tax regime say, don't worry, you're fully exempted. That person ought to be happy. But people who want to create fear and tension say, oh, what are you being happy for? Don't be happy. They want to kill us with tax. So are you saying we should rather go back to the old way, where the minimum wage earners, we are not exempted? So, but this law exempts minimum wage earners, categorically exempts them. And even if that person said the 40,000 will be taxed, there's also a way we calculate taxes. It's not just the way they do. That's why you're entitled to an informed opinion. Where you don't understand the matter, you reach out to those who understand. It's not just, we don't just tax on the 40,000. There are other deductibles that will even reduce the taxable income. We're going to see that as well. And then they said Nigerians in diaspora will be taxed. They say when they want to, maybe they have someone abroad and the person transfers money to his family members or friends in Nigeria, they say, oh, the government will just tax you 20%. I don't even know how they get their tax rate. So the government will tax you 20%, 10%, whatever percentage they like to say. That is not true. Those Nigerians in diaspora, they are already taxed in their hosts. They are already taxed in their host country, in the country of residence. So what those remittances are not taxed, please. Okay. So an influencer commented the other day, said this new tax law have been giving him sleepless nights. That January now they will start finishing us with tax. I thank God some people who have started taking interest in the tax laws and studying and started getting a proper understanding of what obtains. So myself and some of us commented and said, those sleepless nights that the tax laws have been giving you, have you taken one of those sleepless nights to study the tax law so that you can come up and push something correct? And then they will not do that. They rather do what will raise a large following and then gain sentimental comments and move, and then based on the amount of comments and impact their post makes on social media, that's how they get paid. So possibly they are doing that deliberately. So they say pension and retirement benefits to be taxed. That's not true. Pension, retirement benefits are tax exempt. Okay, so these are just some of the contentious issues and myths that we are going to address now. This picture you're seeing here, or this slide here, is actually a reflection of what happens when misinformation pervades the economic space. Okay, so this happened on the 11th of November 2025. Now, look at this quote. It said, it is negligence to misinform out of ignorance. You misinform out of ignorance. You are negligent. If you're handling a delicate matter, a delicate issue, and then you make decision out of ignorance, and something goes wrong, those ahead of you, those above you, those you're answerable to, will say you have been negligent. And that is not good, to misinform out of ignorance. More so when we are doing that in an age where is the information age. We have information at our fingertips. And so the tax laws have been have been downloadable for a long time. Yes, they say, oh, there have been contentions about there were omissions in a particular act. But have you studied the tax laws before then? And then even the one that they say they changed, can you defend it properly? Do you know those ones? So, and actually, the Nigeria Tax Act was not the act in contention, it was the Administration Act. That Administration Act has 148 sections, and it was only 8 that they said had issues, which the chairman of the Fiscal Policy and Tax Reform Committee addressed and said the House of Representatives have been to set up an investigative panel to address that matter. So let them come up with their findings. But he emphasized that it will change the country if they suspend the tax before before January 1. Okay, so it is negligence to misinform out of ignorance. It is economic sabotage to do that intentionally. Look at what happened here. In this particular day, this was the reaction of the capital markets to the capital gains tax regime, the new capital gains tax regime. That's there were 20,173 views valued at 23.5 billion, averaging 1.16 million. What happened was that a lot of people were in panic. They said capital gains tax will increase, and so let us just sell let us dispose our stocks and shares and then be safe. And that led to a steep decline in the all share index that day. And that was the steepest for 15 years in Nigeria, 5.1%. The market capitalization plunged by 4.64 trillion. When you are selling something in panic and in a hurry, you tend to sell it below the value. And so a lot of people disposed of their capital, of their shares and stocks below the value. At the end of the day, the market valuation, the capital market valuation reduced that day from 94.5 trillion to 89.88 trillion for over nothing. That was just sabotaging the economy. Over $8.3 billion was lost. Was just lost. Valuation of our capital market was lost because of misinformation. So when we misinform, we are sabotaging the economy and we are frustrating the policy objectives. Okay. So they said, and that was done to avoid a perceived unfavorable capital gains tax regime of 52 billion a year. We're going to see more of that capital gains tax and what actually obtains when we come to what has changed. Okay, so let's look at some comparative tax rates between Nigeria and selected countries in Africa. Now, under the new tax laws, Nigeria will have the lowest tax rates for major taxes compared to Ghana, Kenya, and South Africa. These are, at least we can say, these are contemporaries, okay, in Africa. Now the VAT rates. The VAT was not in the old tax regime. Our VAT rate was 7.5%. It was not increased in these new tax laws. It was maintained at 7.5%. But look, what we see in Kenya, 16%. What we see in Ghana, 15%. In South Africa, 15%. And they did not take to the streets to protest. Although we saw a protest in Kenya, but we may not be able to comment fully on what happened there. And then tax on airtime, our tax rate is 0. Kenya is 15%, Ghana is 5%, and then South Africa is 0%. Our highest rates of personal income tax, the highest rates, because our personal income tax rates are not a fixed rate. We do a graduated system, progressive system. So the highest rate is 25%. For Kenya, 35%, 35% of their taxable income. Ghana is 35%. South Africa is 45%. Imagine that. And then for Nigeria now, the small company tax rate, small companies, they say your tax rate is 0. Okay. And then Kenya, they say, oh, small companies, you pay 3% of your turnover, not 3% of profit, 3% of turnover, which is even sizable if you look at it very well. Ghana said 3% of turnover, South Africa said is 0. For large companies in Nigeria, our tax rate is 30. They are looking forward to reducing it to 25, but for now it's 30. For Kenya, it's 30. For Ghana, it's 25. For South Africa, it's 27. If you look on this side, you will see an invoice. If you look at that date is 20th of September 2025, an invoice from a Buka restaurant in Ghana. Look at the charges highlighted by the red line. The charges there, 2.5%, 2.5%, 11%, 1% COVID levy, 15% VAT, 1% tourism levy. So those are taxes in addition to what the person bought. You see that we don't even have such a thing in Nigeria. So the tax regime policy was drafted, or the laws were drafted in such a way to favor us, and most especially the poor and middle class. The people that it will affect a little more will be the higher income earners, those that earn possibly 25 million and above a year. Those are the people that will pay a little more. Okay, so the lower income earners will even have some marginal reduction in our take-home pay. I mean, in our taxes, and it will reflect in our take-home pay so that it will be more, and then we have a little more to spend. So there's actually no reason to come out and say, let us fight the system, because coming to say, let us suspend the tax laws is not a neutral statement. It's not a neutral stance. It is not a neutral stance. If you say no to the tax reform, you're actually saying yes to the old tax regime. And do you want us to go back to the old ways where businesses were overtaxed, multiple taxed, and then there were confusions and a lot of other issues we're going to see as well? There's a wrong perception that the government of the day is introducing new taxes on the masses. So Tinubu's government want to kill us with taxes. Let us try to be objective, okay? The chairman of the Fiscal Policy and Tax Reform Committee, Mr. Taiwo, really, he mentioned something. He gave a challenge when he was carrying out a sort of training to journalists I think it was in Abuja. That day I was able to follow online almost for a great portion of the day. So he challenged them. He said he's going to give 100,000 naira to any journalist, investigative journalists. You know, journalists have a way of getting data and carrying out investigative journalism. Come forward and tell me which tax this government, this present administration introduced to Nigeria as at that time. And then he said he's going to give them 100,000 if anybody comes forward with that. And nobody have been able to claim that is 100,000 cash price today. So, but on the contrary, many taxes have been repealed, reversed, or suspended by the government. The excise tax on airtime, 5%, cybersecurity levy on money transfers, carbon tax on single-use plastics, excise tax on imported vehicles, imports duties on food items, agric and pharmaceuticals, and then 4% import levy. The Financial Reporting Council of Nigeria charge on private companies, expatriate employment levies. So these are taxes, levies that were repealed, reversed, or suspended by the government of the day. No actual new tax was introduced. And also, the tax rate was not increased. Okay, so I see people coming up and say they have increased the tax. The government just increased the tax, and it is actually sad because the information is in the public domain. You can actually get it by a simple Google search or a simple 10 minutes research on this matter before coming up to make categorical statements. So it actually tells on the person that makes misleading statements like that you don't have the time to just take a little time to check the facts before posting and causing undue anxiety on the country. Where we were before the tax reform. And like I said, saying no to the tax reform is actually saying yes to the old tax regime. So let's see where we were in the old tax regime. In the old tax regime, we had a problem of low tax to GDP ratio. This is a very serious major metric when we look at the tax system in Nigeria. In short, in 2023, the IMF mentioned that Nigeria had one of the lowest tax to GDP ratio in the world. It was at that time far below the African average. I don't know if you can imagine that. When we say tax to GDP, GDP is a metric, a measurement of the economic activities of the country. And being the most populous black nation, the most populous nation in Africa, one way or the other, our GDP should be a little high. Now, the tax collected, the tax to GDP ratio, the tax on the GDP is actually low when you look at the economic activities in the nation. So that GDP ratio was very low, lower than the African average, was below 10%, lower than the African average. Smaller countries, smaller economies had higher tax to GDP ratio. So that was a reflection on the economic state of the country at that time, that we had a very low tax to GDP ratio. And why was that? There was a lot of evasion, a lot of leakages in the system. So that was why the reform was necessary. And then we had over reliance on borrowing, a lot of borrowing. Nigeria had a revenue crisis. So when we see sometimes the National Assembly approves the president's request to take additional loan, people shout, "Why are they borrowing? Why are they borrowing? Why are they borrowing?" We are borrowing because we have refused to pay our taxes. Okay, a lot of people have refused to pay their taxes. They have been so happy and satisfied in tax evasion, and they don't even know. Some of them don't actually know that it's a crime. So they have not been satisfied, and then they cry, "Why are we borrowing?" We have a revenue crisis, and all the efforts to create reform have not been meeting the mark. When there is a little increase in our revenue, we use it to service debts, and then the cycle continued. Borrowing, if there's an increase, we service debts, we borrow again. So that is a major problem of the economy, of the system. And then we had a weak tax system that was plagued with inefficient tax collection. When people come in this modern age and time, you see people going about, and then the average business person on the streets or in the business place does not even know the full tax he's supposed to pay. Once they come, they say, "This is your tax you pay." They say, "Okay." "This is your tax you pay." They say, "Okay." "This is the tax you pay." They say, "Okay." They don't even know. We had outdated laws. Tax evasion was pervasive. We had a narrow tax base because the tax base now was now low. Not everyone is captured in the tax brackets, on the tax nets. Tax laws the tax system was complex, placed with multiple taxes and unconducive for growth. There was excessive tax burden on businesses. They are confused. They don't know which one they are doing. Taxation of poverty was normal. For the minimum wage earners, we are paying taxes. Those earning below the minimum wage, we are paying taxes. Okay, there was tax on capital, on investments, and then there was over dependence on oil revenue. And this could be affected, I was always affected by fluctuations in oil prices, and it impacted the government revenue. So sometimes it will make them not be able to meet up budgeted revenue. And then we saw fiscal constraints. Once the revenue uh, falls shortfall, the revenue shortfall limited the government's ability to fund essential infrastructure and social programs. Okay, so those were the issues we faced, and then it affected us because it limited the fiscal space, less money available for government to carry out the activities for development, for education, for health. Of course, the government had money, and of course, we can say they could do better in terms of the usage of public funds for the common good. Of course, that's the core issue that cannot be denied. And that is part of the reason why the tax laws have been graced with a lot of distrust and outcry, even though they were not uh, objectively placed. But we cannot downplay the distrust that the government of have caused the citizens to have due to poor usage of the resources they have been getting. So part of the tax reform objective is to see how to put things in place for more accountability. And then there have been increased debt burden, growing national debts, and higher debt servicing. And then there have been economic instability that created uncertainty and hindered economic growth. Look at this. This was the tax laws that were there, or that have been there for a long time. If you look at these, are over 60 taxes that someone will pay, and sometimes you don't even know which one you're going to pay. Someone can come and say you're going to pay economic development levy. Another person can come and say you pay business premises registration fee, road taxes, pools betting, lottery. So there are just multiple, and this kind of thing will cause confusion. So the tax reform say let us harmonize these things. These things are too much, and some of these taxes have their powers from the constitution. So the law cannot just come and amend the constitution. The tax reform acts cannot amend them. So the tax reform and the fiscal policy committee have been carrying out, have been making efforts to see how to launch a bill that will amend the constitution so that those things will be reduced. And also the Joint Revenue Board, because all the state internal revenue service are part of that. They are subscribing to a harmonized list of collection that have reduced the state levies and taxes that they can charge. So a lot of states, if you have been looking at the news, a number of states have been passing that harmonized list so that the taxes can be reduced. So that's the part of the reform. Okay. So these taxes were just too much for somebody. Sometimes you don't even know which one you're paying. Sometimes the government of the day, those who just come, and then a poor person, when I was younger, I used to pity some poor business people, someone who is working, and then they come, they just seize the person's goods. Someone who is pushing with that road, and there are some goods there, they push the person's, they seize that and say, you have not paid so tax, you have not done this. And those people, they are very, very hard-hearted, people that do that, and then there's no outer of pity. So tax reform is saying you don't tax poverty, okay? You don't tax poverty. You don't tax poverty. That's why they said those people are exempted. I've been seeing some posts, and I've been tired. I sure that I grew tired. I refuse to comment. The challenge time, Mr. Taiwo Idele, the chairman of the Fiscal Policy and Tax Reform Committee, in 2020, he made a comment on Twitter. He said, because in 2020 there were a lot of issues in the economy due to the COVID-19 issue. So a particular state government wanted to introduce taxes on bread. And Mr. Taiwo Idele said, COVID or no COVID, you don't grow by taxing poverty. Okay, that's what he said in 2020. So people have now gone to get that his tweets in 2020 and said, now, this time now, what are you now doing? Are you not taxing poverty? I'm just tired of commenting. He did not tax poverty. There was no tax. Even those, the VAT on food items, all those things were exempted or zero rated. There are no taxes on those things anymore. So people are just commenting based on sentiments and bandwagon movements when everybody's saying, okay, let's go this way. And then everybody's going that way without understanding. There's something that happened. Let me just explain this. This one happened in the Bible. There were people, they were doing riots against Paul because he was preaching. So those people, they were actually making their money from, they were silversmiths from the goddess and all from the gods that were serving. And so when Paul came and said, these things are not true gods. So they saw that their gains were growing. So they gathered themselves and started shouting, great is Diana of the Ephesus, great is Diana of the Ephesus. And then they caused a great riot. A lot of people gathered. And then the Bible recorded that the greater parts at the end of the day that gathered, everybody was confused. The greater part did not even know why they were there. The greater part did not even know why they were there. So that happened because of bandwagon sentimental movements. A lot of people say, let us protest. Tinubu taxing poverty. Tinubu taxing poverty. Then I ask, very good. You have a right to comment. You have a right to criticize, but do so constructively. which portion of the tax law are you fighting? Which portion of the tax law are you against that says they are taxing poverty? Which one is there? Are you saying we should do away with this tax law and go back to the old one? We are even minimum wage earners. People who earn below minimum wage, we are compelled to pay taxes. Is that where we should go? At least this one has a marginal, at least there's a little room for us. So at least this one is better. So there's no need to go on. So before we go out to join let us have proper understanding of what we are protesting against. Okay. So let's look at what has changed. What has changed in this new tax reform. So this is a summary of what the major aspect of the reform, the VAT reform. So we are the VAT is a tax on the value added at the various stages of production on goods and services, and is eventually borne by the final consumer. So business people now are not eligible to claim input VAT on asset and services overheads. Before they didn't have that right. We'll see more of that later. Then we see the personal income tax reform. The exemption threshold was increased and more progressive rates, and then the reliefs and allowances. Then we see the company income tax reform. How before this reform, for a company, you are a small company if your turnover is below 25 million. Turnover is your sales, your annual sales is below 25 million. But now they have increased that to 100 million. And small companies, they now say you are exempted. Your tax rate is zero. Your tax rate is zero. You don't pay capital gains tax. You don't pay the economic development levy. All those things are zero for you. Then the capital gains tax reform. The Capital Gains Tax Act was actually repealed and replaced with the gains on capital taxes on capital gains captured in the Nigerian Tax Act. So we are going to see more of that also. And then the reform curbs inflation. Evasion, tax evasion. So there will be fiscalization. That is a system where invoicing and sales will be captured in the government system so that the government has an idea of what is happening. So this system tries to help the government the tax authorities to have more data intelligence, tax intelligence, data information sharing so that they can be able to identify evasion quickly, especially high risk evaders, high net worth companies and individuals want to evade tax, they can be easily captured. So I thought Odoyi said something one time when I was listening to him. He said, when your income increases, okay, it will reflect in three ways. Number one, it will reflect in spending. Your spending will be more. Your saving, it will reflect in your savings. Your savings will be more, and it will reflect in your investments. Your investments will be more. So those things increases when your income increases. Now, when your spending, your saving, and your investment increases, while your tax is not increasing, then you're raising a flag. So your spending, your investment, your saving are captured in the system. There's a provision in the Administration Act that says for individuals, the banks will give a report to the relevant tax authorities if for individuals you have inflow of, they do that quarterly, you have inflow of 25 million a year, a month, 25 million a year that comes into your account. For businesses, 100 million a month that comes to the tax authority. The banks just tells this is what came in. There's no room to hide. And then recently we saw a lot of posts flying around that, oh, please, because of these tax laws now, the tax reform, please, when you are transferring money to me, narrate it properly. Name it. Some business people say these are my acceptable narrations. Please narrate that it is a gift, while it is actually payments. It is actually payments for purchase. They say narrate that is a gift, narrate that is a support, narrate that is a loan repayment, and then they think that they are wiser than the tax authorities. So those things have little or no impact in your taxes. Like I said before, they don't tax what is in your bank account. So business people here can agree with me that you may make loss, okay, but you still have money in your account. That could be because you borrowed some money, or those are just your capital, your working capital. In reality, you actually made a loss, or you just broke even. There was no gain. Your profit was zero, but you still have money in your account. So they tax income, they tax profits, not revenue, not what is in the account. You have the ability, the opportunity to self-assess. Why you fail to do that, you are now guilty of tax evasion. When the authorities now come, they now do audit and all that. That is when you now start going to your bank statements to identify. Okay. Now, when you are posting and saying this thing is for is for support, is for loan, is a gift, you are not an NGO. You are a business person. So why are you saying all those things are for support? Those things don't make any difference at all. Okay, they don't make any difference. They are good. It's good to give proper narration when you are sending or receiving money. It's very good, so that you can be able to make reference to that when you're going through your bank statements or uh, um, your accounts history. You can transaction history. You can be able to identify in case you forgot what this was for, or a particular payment or inflow was for. You can be able to make recollect and properly account for them. So that for tax purposes, those things they are not, they have no impact. So those people doing it, they actually doing it in, I don't know why they would do that. So the tax reform is to help to moderate avoidance. Okay. And then there is also the introduction. This one is a new introduction in the Nigeria's tax system. The Office of the Tax Ombudsman. It has never been there. The new introduction. The tax ombudsman is an independent and impartial arbiter that is like someone who fights for taxpayers. So when the tax authorities come, you can go to the tax ombudsman and say, please come and plead my cause for me. And their services, the tax law says free of charge. They don't charge anything. So they help you to look at your tax matters, okay? They can help you a lot. So this is a new introduction to the Nigeria's tax space. Then we have the tax agents now that must be accredited. So for businesses that may not be able to carry out their tax matters and then they don't have an accountant or internal accountants to help them, there's the tax agents are available, but they must be accredited. This new tax uh, reform, they must be accredited by the relevant tax authorities. So then we have the withholding tax regime. There have been now the exemptions. So manufacturers, so no, don't exempt, don't withhold their money, because withholding tax says that, oh, when you want to pay them, if your vendor is a manufacturer, so okay, you will withhold a portion and remit to the government on their behalf. But they say no, please leave it. They are exempted. Small businesses are also exempted from withholding tax, and then small businesses are also exempted from even withholding suppliers' um, money or payments for withholding tax. And then the rates are also lower. The withholding tax rates. Withholding tax is guided by Section 51 of the Administration Act, and then we already have a withholding tax regulation that became operational in 2025 January, that reduced the rates of withholding taxes. Okay, then for personal income, for individual income tax, look at what happened. They said your first 800,000 was zero rated. That is, your first 100,000 was, you look at the old band and the new band. The old band say your first 300,000, no zero, is 7%. But the new band said the first 100,000 is zero. And it became more progressive, more progressive. Look at the old one. Said in number 6 there, they said it's above 3.6 million that is taxable for by with 24%. But here it is when you have 25%, 25 million that you are taxed above 25 million, because it's done progressively, that you'll be charged with 23%. So at the end of the day, what it translates to is that your tax burden for individual, for personal income, for employees of organizations, just check your January income will be a little bit higher than what you used to gain last year. They did not increase your salary, but your tax rate, your tax burden was reduced. So at least you have a little more take-home pay that you can use to settle one or two things. So that is a welcome development. People saying no, actually saying they want you to pay more. They want you to be business as usual. It's only the very high net worth individuals that are very, very few, less than maybe 2% of the entire population that are going to pay higher. They'll pay maybe 1% more. Those are the people. So those people, they are not even complaining. It's actually the poor people that they say they want to go and protest. And then we ask, what are you protesting about? They are not going to explain. So there's a way of calculating the tax, not just straightforward. Some people have been self-proclaimed tax experts. We see them on social media postulating how tax rates are calculated. But it's not just straightforward. We don't just say, these are your rates. There are deductions that the tax laws allows. Deductions, your pensions, your contributions to National Health Insurance Scheme and all that. Even you have the rent relief that says 20% of your rent, annual rent, is a deductible. Up to a limit of 500,000 is a deductible. They even said if you if you took a loan to build your house, and they said the interest on that loan for those owner occupied house that you want to build, your own house that you took a loan, those interest on the loan is also deductible. So it's good if you work in the organization, you can approach your HRO, your accountant, and explain, please, I have these things that will help me reduce my taxes. So at the end of the day, two people earning the same gross income may not go home with the same net income because one has more deductibles that makes him able to get more tax exemptions. So at the end of the day, his tax burden is a little lower than his colleague. So that's why it's important to have this knowledge. So just look at this. Now, under the old tax system, assuming a deduction of 10%, the old tax system, the person earning 840,000 a year was paying 32,000, assuming 10% was deducted, 32,528 naira a year. But the new tax system, you see, your tax rate is zero. So the person has more money to spend. And then if you go like that, it was like that, more income, more inflow. You have more income. It's only those who are from number 9 that are earning annual gross income of 30 million and 60 million that are going to pay more taxes. Those people are actually not even complaining. Okay. So our taxes for those who are under the payee system, who are employees, will reduce, even if it's a little amount per month. At least you can use it for toothpaste, for soap, or whatever. So it is something that was not there before. Okay, so our tax is actually reducing. Look at this barcode here. You can use it to calculate your tax. It is a link. It will give you a link to the website of the tax reform, the Federal Fiscal Policy and Tax Reform website, where you can calculate your taxes and compare and see that as long as you know your deductibles, you can compare and see that your tax rate, your tax burden is actually less. Okay, as against what those other people want us to believe. Corporate income taxation. When we say corporate income, we're talking of companies. For companies, they said your small companies have not been reclassified from your turnover of 25 million to turnover of 100 million. So large companies are those that have annual sales, annual turnover of 100 million and above 100 million. So once your turnover is 100 million and below, your tax rate is zero. It's large companies that their tax rate is 30%. And remember, your tax rate is not a tax on your turnover, it's a tax on your profits. After deducting, so your turnover is your sales. After all the expenses, then you arrive at your profits. Then that's where the tax rate is applied on. So they want to even say how to reduce it to 25%, but like I said before, for now it's 30%. So before now, there were a lot of taxes and levies that were consolidated to 4% development levy. Before we had to have tax, NITDAL, and a number of others, but they have been reduced. Before they said, even if you made a loss, you should also pay tax. You pay a minimum tax. But now they say, no, minimum taxation is repealed. Please, if you made a loss, you don't pay any tax because tax is on profits. So there's an effective tax rate of 15% for MNEs, that is multinationals that are in Nigeria. Those are very big companies. So if for whatever reason, the taxes they pay is actually lower than 15%, that the effective tax rate is lower than 15% of their profit, they should recalculate it so that it will be 15%. This to ensure equity. Those people are making a lot of money. So they will not complain. Their turnover is, look at it, in billions. So the poor and those other ones are treated fairly. Also, tax on capital gains is harmonized with income tax. That's what I said I will explain later. Yes, your capital gains was increased to 30%. But if you were a small company, your capital gains rates is 0%. So all your income, capital gains, your profit, everything are joined together, and then your rates of tax is the rates, whether it's the rates that you take on, whether if you're a small company. So if you're a small company is zero, a large company is 30%. All right. Then as an individual, we are going to see that when we look at the reform on capital gains tax shortly. So for taxation of capital gains, it's not progressive, okay? It's not progressive. Capital gains tax is broadened to include digital and intangible assets. Now, individuals are taxed at progressive rates, like we saw in the tax band from 0% to 15%, 18%. Those are the rates. It's not straightforward. But for companies, big companies, large companies, 30%, 30%. And then, excuse me, and then there's allowable loss reliefs. If you made a loss, you are you are allowed to deduct those before calculation on the gains. And then there is incentives for disposal of shares of up to 150 million in a year, in a 12-month period. If you dispose your shares, how many people have holdings of up to 150 million in Nigeria? I don't think they're up to 10% of the population. So they said if you dispose in a year 150 million shares, the gains on your disposal, you are exempted. You are exempted from capital gains tax. Okay, so it's not everybody that will be charged. And then if you dispose beyond 150 million, but you reinvest within the system, you are still exempted. So capital gains tax now must align with your income tax filing. Then for value added tax, it was not increased, it remained at 7.5%. You can now claim input VAT. Input VAT is the difference between your output VAT and your input VAT. There is input VAT actually is your tax as a business person, the tax you incur, the VAT that was charged on the goods you bought that you want to sell or you want to use for production of what you want to sell. So now your input VAT has now been expanded to fixed assets and overhead and other services. Before it was only on your inputs for receive or for production. So you can claim those input VATs. So you can claim those and then reduce it from what you charge, your output VAT, and then the difference what you pay to the Nigeria Revenue Service. So there's also going to be a legal framework for fiscalization where all those things will be captured in the government system so that they can easily trace those transactions. There's a VAT refund of 30 days. If you are eligible for VAT refund, possibly your input VAT is higher than your output VAT, you can claim tax refund. Or you deal on zero-rated VAT items, you can claim VAT refund for those input VATs. And then small businesses are relieved from VAT obligations. You don't need to charge VAT for a small business, although they can do that if they want to, but you don't need to. For a small business, you don't need to charge VAT. So there were a lot of exempted items and zero-rated items. Okay, so that reduced the prices of goods and services. Generally, a lot of items. So when you go and you see people charging VAT arbitrarily and say it's because of the tax law, you find out these things are zero rated, these things are exempted. You don't charge them whether you're a big or small company or a big business. And if you're a small business, you're not supposed to, except you decide to, and you don't need to to charge that VAT. Someone came on social media and said this tax is Baba. said next year is, or this year is going to charge 7.5% on VAT for barbing service. People are saying, which barber shop is a big business that makes turnover of 100 million? And there's no need. You can ask me, this is just a small business. Why are you charging VAT? If you want to charge VAT, it's okay. Since your value is, your prices are higher, I mean, I'm going to another barber shop. There's no problem. So you should be informed. And then for the informal sector, there is the presumptive tax provision. So there's going to be a presumptive tax regulation shortly, very soon. They are working on it. That says those people that are in the informal sector that cannot properly determine their income for tax purposes, this is the regulation that will guide them. This is how they are. So some persons, some business categories of business, very, very small business will be exempted. And then those that qualify, especially with turnover of beyond 12 million, they will told how it should be captured. The Tax Act said, the Arbitration Act in Section 15 said that it should be simple, should be simplified. It should not overburden us. So finally, our recommendation and compliance steps is as follows. There should be objectivity. We should address issues objectively, not based on bandwagon sentimentalism. Should address issues objectively. Once, if you don't have, because I said before, you're not entitled to your opinion. You're entitled to your informed opinion. There must be objectivity, not just sentimental response that is based on fear and anxiety, not based on facts and correct information. If you must criticize, do so constructively. Don't downplay the efforts of people who are trying to make our country better. Mr. Taiwo Udili, the chairman of that Fiscal Policy and Tax Reform Committee, I can tell you for free, that man is going beyond himself in this tax reform. Is someone that should be even be given a national award. But a lot of people are just going out of their way to insult the man. If you go through the credentials of that man, you will even marvel. And then they are going out of their way to say that man is a nonsense. We should construct our criticism should be constructive. Which portion of the tax law do you have issues with? How can it be better? So that this rat man, he can also learn, and then he can say, okay, this is how we should do it, not just through inflammatory rhetorics and outright falsehoods. And then we should get correct information from the correct sources. Now, there will be a lot of implementation guidelines this January from the various tax authorities. So we should get information from them. You can follow the Nigeria Revenue Service online, the Joint Revenue Board. You can follow the Fiscal Reform and Tax Policy Committee. Look at their various social media handles. Go through the website of the the relevant tax authorities, so that you'll be kept abreast with a lot of new information, implementation guidelines, and what you're expected to do. You see how you can get tax IDs for taxable persons, individuals who are earning income from taxable activities in Nigeria, companies and business entities, and non-residents that have tax obligations or have significant economic presence in Nigeria. So before we had tax identity number, but now we have tax ID. So you can visit that website. It does not take 2 minutes. You can generate your tax ID. Okay. And then compliance requirements, register and obtain a tax ID as a taxable person. You should notify the relevant tax authority of change of your address. You should maintain books of accounts. There must be periodic tax filing because we use a self-assessment system, and the use of fiscalized devices and e-invoicing, the system through which the government will be able to capture your transactions as they will bring forward, because we are still waiting for a number of these implementation guidelines. And then your tax incentives returns must be made if you are due to the nature of your business, you enjoy some incentives, you make returns on them. The relevant tax authority will stipulate, and then make quarterly. This one is by the banks. They make quarterly returns. Like I said before, 25 million for individuals, 100 million for companies. And then for those who deal on virtual asset, cryptocurrency, and the likes, they make returns as well in accordance with the law. And then disclosure of tax planning schemes. Those bigger companies that want to engage in activities to avoid taxes and all that. So you must disclose those. And then there's tax evasion and there's tax avoidance. Tax evasion is criminal. Tax avoidance is when you make use of some loopholes in the system or carry out activities legally, but at the end of the day, you're able to avoid certain taxes. So once it's massive, like I said before, one of those tax avoidance means is base erosion and profit shifting. So you should disclose that. So thank you for listening. Um, just a few minutes for those who may have a question. You can drop it on the chat, please. You can drop it on the chat. For Biageli Ezelo, please you can type it on the chat. Okay. All right. Let
Okay,
me.
can I speak? I don't know if you can hear me.
Yes, I can hear you. You can go ahead.
Um, Good afternoon. Thank you, Nick, for this insightful teachings. So first, I've been a bit concerned about this whole tax stuff, and you said small businesses, they will not be taxed, that their turnover is below 100 million.
Yes.
Okay, but you still need to file your taxes. Like you still need to file taxes in terms of you need to still put in your like file it in sense that
Yes. Yes. You still need to do your returns because how would the government authority know that your claim is correct? So you still need to do returns, even if you're a large company and you make no profit. Once you don't have profits, your tax you don't pay tax because tax is on profit. So you still need to make returns. You still need to do your tax, your filing at the end of the year within the period provided by
even
the.
even individuals like even people that work for people that are employees now, they their employers would be the one filing taxes for them because those
Yes,
deductions. Okay.
yes,
So
the employers will do the timely annual filing. So if you're an employee at the end of this last year, so the filing most times we do it in January. So afterwards, the relevant tax authorities will issue our tax clearance certificate. So you can get them from your accounts or your HR and meet them and say, please, you have been deducting so amounts from my pay slip every month. Where's my tax clearance certificate? Those things are important for setting transactions and approval with agencies of the government. So,
okay.
but for individual businesses, people carrying out business in the business name, they will they will still need to do returns on their own or through their agents.
All right. Then every registered business, right, must file taxes, small or big, right? For instance, now, okay, let me use my father's business as an example. My dad owns a motor parts shop, and his company is registered. But then, will he still need to? He doesn't have an accountant. Him and his boys do all those stuff. Will he still need to file taxes based on this tax reform?
Yes, he will file taxes. He will file taxes. The issue is there are those we say they are in the informal sector. Those who say they are in the informal sector, they will be captured under the presumptive tax regulations. Section 29 of the Nigeria Tax Act allows the Minister of Finance and the um, tax Nigeria Revenue Service, Joint Revenue Board to come up with policies that will help the system. So they don't want to, it's not as if they want to punish people because you are in the informal sector. So there will be a presumptive tax regime. They will bring presumptive tax regulation that will capture those in the informal sector. And then they will be able to tell them this is how you would do it. So we are still waiting for the regulation to come possibly by the end of this month. That's why we must follow those official channels of those relevant tax authorities and the authorities on these tax matters and not just everybody on social media. However, if it's a formal organization, is registered and all that, he can engage the services of maybe a tax agent
Yeah.
or what do they call this now? You can hire maybe on part-time basis, on freelance basis, an accountant to help him capture and do his tax on his returns on his behalf.
Then my last question, sorry for that. So also for someone that works remotely for I'm a software engineer. For someone that works remotely that gets side gigs from outside Nigeria, it's my income still going to be taxable?
Yeah. Okay, yes, your income will be taxable. Your income will be taxable. You should self-assess and self-declare at the end of the year. Your income will be taxable.
So this filing is going to be yearly. It's not something of done
Yes,
monthly.
it's only those in the payee system, those who are employees of organization that their employers or their HRO accountants do the tax returns monthly and then do a comprehensive tax filing at the end of the year. But for other businesses, tax returns is annual, yearly, after the year, at the end of the year, within the new year, the allowable period, you cannot do your tax returns. So even those who are captured in the payee system and who also have side gigs that gives them inflow that are not captured under the payee tax, they should also uh, do that self declaration, self filing, self assessment. Okay. Right. Then someone said if someone sends me say 2 million naira to my bank account, would there be any deduction? No, taxes are not done on money in your accounts. It's not just they don't there'll be no deduction. There'll be no deduction for tax purposes, possibly maybe bank charges or whatever, but there's no deduction for tax purposes. It's not done. The taxes are not done arbitrarily. It has to be on income at the end of the year. So there's no other question. I want to appreciate all who have taken the time to join in this webinar. I want to appreciate everyone. Thank you very much. So I think we have come to the end of the webinar. Okay, I see more questions. Sorry. Um,
Hello, sir. Good afternoon. Can you hear me?
okay, I can hear you.
Okay, thank you very much for this opportunity. I asked some questions earlier in the comment section. Seems like you couldn't see it. Okay, so I have two questions, right? I'm going to like put them into one so we can like get at it. So now, for me now, I am a remote worker. I work outside the country, right? And I work in the blockchain industry. Now, the question I have now is similar to what the other lady just asked. I can personally declare my personal income, but I also have like money coming to my hands, which cannot be categorized as personal income. It's more like gifting, gigs and stuff like that. And it's also there's no like an amount or limit to how much those money can amount in a year or in a month. So how can I declare that, or will I be also be taxed on that? And that's like side hustles, right? Then for businesses, say I structure my income into a business, I put it under an LLC. From my research, I discovered that even if I put my income into a business like an LLC, whenever I take out money from my business, my LLC, I will still be taxed as personal income. So I want to know, is there a way around that too?
Okay. Your first question, you asking if, well, you mentioned that gifts, side gigs and whatever. So those gigs, taxes are levied on income on something that came as a result of value. A gift is not coming to you as a result of any value you rendered, any service you rendered. But if it is a payment for a service, if it's a payment for um, a job you did, yes, those are part of your income, and then you still need to self-assess. So they are you just need to keep records, part of our individual responsibility as keep records as different from gifts and just remittances that they gave you for some other things. But those things that are actually payments, you will keep records and self-assess at the end of the day. Then if you say you want to take advantage um, of the benefits that you can gain from being registered as a company to do your business under a company name or as a company, you only suffer company income tax when your turnover is above 100 million a year. The turnover is your sales price, the amount you receive for the services you render. If at the end of the day they accumulated over they are more than 100 million a year, then your tax rate is zero. Before now it was 25 million. So that is as a company, your there are a lot of formal requirements now. Your tax returns will be audited, your accounts must be audited. So there are a lot of there are more requirements, even though you're paying zero tax. That you have to file audited accounts and other requirements that the Nigeria Revenue Service stipulates or as captured in the Administration Act. So you have to file properly. However, your tax at the end of the day will be zero. So even if you made income, you gain profits, your tax at the end of the day will be zero. Now, your profits, how is profit shared? As a company owner, you get those profits by way of dividend. By way of dividend, you don't just take it by way of dividend. So those dividend now will suffer a 10% withholding tax. So that's the only tax that you will suffer there as the individual of that business. You suffer a 10% withholding tax. So that is that. I don't know if I've addressed your question. Okay. Yes, you can go on, Mr. Gift. Okay, someone said, please, the individual using their day-to-day accounts for personal issues. No, they will not be taxed. They will not be taxed. Let's say amounts coming in are quite large amounts, which will amount to millions in a year. Well, you're not a conduit per se. You're not a, why, if monies are coming through a system, there should be explanation. Like I mentioned, the banks will automatically report that this person has 25 million coming into his account a month. And of course, those things are there for regulatory purposes. Someone may create a bank account under a company name and then use it for money laundering purposes. So those things are still there within the system. A lot of information sharing and intelligence gathering within the system now. So you're not just a conduit. If you have such 25 billion, then at the end of the day, you say they are just coming as remittances. You're not an NGO. You're not a religious body. You're not those kind of bodies that are exempted. And then those monies are just coming through without explanation. Then you're raising a flag. Okay. If you're a taxable person, you're raising a flag, and then such things may raise queries. But ideally, ordinarily, remittances, money coming in and out are not subject to tax, and they are not just taxed automatically. No tax automatically. Okay, Mr. Sampson said, how will e-invoicing work? How will companies be registered for the service? Are there special service providers? Okay, the law says there'll be a fiscalization system that we should subscribe to. That the tax authority will introduce a fiscalization system. Like I said, there will be implementations guidelines that will be rolled out. There will be implementation guidelines that will be rolled out. So until we get those guidelines, we should all hold on a bit, but there will be implementation guidelines that will be rolled out. So for now, we have not seen those. Especially I myself, I'm also looking out for it. The invoicing, the for VAT fiscalization to capture that fiscalization system. We are still waiting for it. So once it takes off, they will provide, they will tell us, and they also tell us how we will go about it. So we are still waiting for it. I see that a lot of people are already going ahead of themselves to say, oh, we are doing e-invoicing, this and that, but it is the government system that will work, that will be used, not private or individual system. Okay.
Okay, so I still have a question. Thank you so much for what you explained. So, on my second question, what I was trying to say is, let's say, I structured into a business, right? And I want to like take out money from my business. Let me say my monthly inflow into the business is like 2 million per se. And then inside the 2 million coming into my business, I am taking out 500,000 naira as personal use. Will I be taxed on that money I take out for personal use, or
Okay.
it's all under the
I
business?
understand your question. I understand your question. That is a little technicality you involved here. If you set up the business and you're done taking out money for your personal use from the company's money, those ones we classify them as drawings, as a reduction of your capital. Okay, you're the one that you release the money to start the business, and capital is increased by profit or additional introduction of funds to the business. So if your business has grown and then you're just taking out money for personal use, those are personal deductions, personal drawings. They are not taxable. No, you don't tax drawings. Those are part of your capital, and then you're still tomorrow you can still decide to introduce some personal money to the business. They are not taxed. It's a
Okay, so
reduction of
in summary now, if
your capital.
I set up a business and I push up, I set up an LSC and I push up all my income as an individual into my business, then I take out some certain amount from the business monthly. I don't get tax on the money I take out from the business, right?
As long as you don't class, if you say monthly, then it appears as if it's recurrent, and so it's having the appearance of being a salary or something like that.
So
Uh,
now the reason why I'm saying that is because as an individual, we also need like some money we need on a monthly upkeep, like to get let's say even as a business to run office expenditure and feeding and stuff like that. So won't that also
yeah, if it's a withdrawal for office expenses, those are part of business running costs. If it's a withdrawal for personal use, those are drawings. The two of them are not taxed.
okay, thank you very much.
Okay, someone is asking a question. When you say an individual should self-declare, do you mean to personally reach out to a tax body and inform them how much you earn? If so, should there be a well-arranged system for non-payee earners? Wouldn't that lead to numerous tax evasion? Well, first of all, they are not actually looking for small people. They're not actually looking for for yes, it's not good to evade taxes, but they are not actually. By the time the audits will be based on risk assessments, and then it will be risk based audit. They see that this person is a range tax evader, and they're not looking for those who are evading 50,000, 100,000. Small money, but it's not good to evade tax anyway. That is it. So then I mentioned the presumptive tax regulation. There are some people that will be totally exempted. There's a range that those that I have turnover of below 12 million, they are just exempted. Don't bother before people. Those people that no matter what they do, they are not going to get rich by this activity, this business. They are just exempted. So there will be a presumptive tax system if you're within the informal sector. If you're within the formal sector, you're aiming, and there are a lot of intelligence within the system that will capture you. It's best to not go be in trouble, but to um, do your returns properly. And also, doing your tax returns will enable you to get your tax clearance certificate, which is useful for certain activities, certain transactions, especially with the government or government agencies. Sometimes you may want to gain authorization for building, for this, for that. You don't have your TCC. You're not being a taxpayer. You've been a tax evader. Then those things will now work against you at that time. Okay, I don't know if there's any other question. I would like to draw the curtain. Gone. For a limited company that have never filed VAT or paid tax, where will they start from? Well, a limited company that have never paid tax, I don't think there's a limited company, except it's a new company. Because even you have to have been making some returns one way or the other. Because you have to file annual returns with CAC, annual returns with the relevant tax authority. And where you have not been doing it, the way to where do they start from? Well, you have to start now. You have to start at least because for now, for this year now, you start because we do a preceding year basis. You have to start filing from for last year, this year, depending on your accounting system. Depending on your accounting system, your accounting, uh, your accounting year. So the way to start is just to start. Just start. Okay. Just start. Or better still, there will be need to engage a tax consultant who can interface with the relevant tax authorities on your behalf.
Good afternoon, sir. I want to ask a question. I'm
Yes,
talking
sir.
about business owners, young business owners. Let me use my mom for instance. She manages a business and it's just a small business. At times, as I was speaking to her, I was narrating about the tax issue to her. So now, maybe at times the payment of goods bought might be sent to her account because at times the transaction she does is just the one somebody comes around and just pay for the goods and the profit has not been paid yet. So I want to know how will she be paying tax? Is she going to go and visit the place they pay tax or go to bank or something like that? So and according to her, she says that w- with what I heard, they said if you do like a business of this thing and you are to pay tax and they collect if you are to transfer like 500K in a month, then you are going to pay 20% of the 500,000 naira. uh And according to her, she says just in the week, self, just payment of goods are at times usually around 2 million naira. So I was like shocked, and she told me that even the 2 million naira, the gain of the business is not even up to it's not up to 100,000 naira, just a 2 million naira goods, but the gain, the profit is not up to 100,000 naira. So how will she be
Okay.
paying out of 20% in just maybe a goods of that is not worth up to that amount? So I will need some
Okay.
clarification.
Okay. 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 I don't know. Maybe you did not join on time because we have already addressed all those issues. Tax is on profits at the end of the year. A businessman for his financial year or his accounting year does not know his profit on the end of the year. So tax is on profit at the end of the year. Tax is not on money in your accounts. The money in your account could be for any reason whatsoever. Tax is never on money in your accounts. Please, those people who are pushing that false narrative that if there is so amount of money that came to your account, they will just deduct it. They are misinforming the people, the public. We don't tax money in your accounts. We don't tax transfers. We don't tax money that is just received. Okay, tax is on your profits at the end of the year. And how do you get your profits? Your total sales minus your expenses at the end of the year. Your profit is there. And then you do your tax returns according to the way the relevant tax authority prescribes, and then you pay the tax on your profits using the tax rates there. So um, it's actually false to say they are going to charge. Nobody will do that. It's not true. If they have been telling you that, tell her that it's not true. There will be no 20%. Where did they get those things from? Someone comes to make such categorical claims, just tell the person, please, the tax laws are available online. Yeah, which part of the tax law are you quoting that says 20% is false? And that's what we have been trying to address for a long time. A lot of people have been pushing that, but it's actually not true. There's no, you don't just tax 20% on something that they paid into your account. It's not true. Okay.
Okay. Thank you, sir.
All right. So I don't know if that would be all. That would be all. Those who want the slide, you may just reach me personally through my mail on the flyer, and then I will share it with as many as request for it. So with that, I think we have come to the end of this webinar. I want to appreciate everyone for participating. Thank you, and do enjoy the rest of your day.